Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Wednesday. We got April 14th. Dow Jones Industrial Average up 200 points right out of the gate. NASDAQ kind of flat. Okay, so what's going on today? We got Coinbase. Coinbase is coming out. Okay, Coinbase sells the cryptocurrencies. It's the crypto play. It's the big one. They're releasing 261 million shares at $250 a share. That raises its valuation to about $65 billion right out of the gate. Should you buy it? I have no idea. I do not buy things on their opening day. No, I don't. But what this should let you think about is what it's going to do to the price of Bitcoin. Bitcoin had a record high, 63,000. 63,000. Now, there's a lot of people that have different opinions on Bitcoin. Some people think it's a new money. It's going to replace the dollar. Other people think it's going to zero. It's a multi-level marketing scheme. It's a Ponzi scheme. They both could be right. I don't know. I trade the market that's in front of me. Here's what I think. I think Bitcoin will reach 100,000. Yes, I do. Will it get to 1 million? Maybe someday. Will it go to zero? Maybe someday. I know this isn't much help. But what happens when you get things like Coinbase coming on? Well, it gives institutions a way to get exposure to the crypto market without actually buying cryptocurrencies. They can buy Coinbase. They can buy the ETF, the GBTC. They can go on to commodity futures contracts and buy it there. There's other ways. They don't actually have to own the crypto anymore. They don't have to own Bitcoin. Maybe this is not such a good thing for Bitcoin. People think this is really good, but maybe it's going to steal some of the thunder. Bitcoin's volatile, very volatile. Anyways, I'm still a believer to buy on the dip here because the U.S. is going to continue to print money and it's going to inflate all bubbles. Now, I'm not saying Bitcoin is a bubble. Bitcoin may be very cheaply valued at 63,000. I just trade the market that's in front of me. Look, if I lived in the 1600s, I'd be trading tulips because tulips were the bubble then. Once again, not saying Bitcoin's a bubble, but I would be trading tulips because it goes up and down, up and down. Bitcoin goes up and down, up and down. Buy the dips, sell the rips. That's what market we're in right now for Bitcoin. What I want to talk today about is a little bit on the earnings season. We're entering earnings season. Now, here's really good news. Earnings are going to be great. They're going to be great. They just are. We printed trillions of dollars and it's all found its way into the marketplace. It's found its way into the stock market. Earnings are going to be up. But now this is where the caution comes out. Look at J.P. Morgan today. J.P. Morgan, one of the major banks, they come out with earnings. They blow away earnings. Their estimate was for $3 a share. Earnings for the quarter. They blew it away. They hit $4.50 a share. Their revenues were expected to be $30 billion for the quarter. They're at $32 billion. They beat on every metric possible. What'd the stock do? Stock went down $2, $2.50 right at the open. It's come back a little bit now, but it's still down over $1 with the best earnings possible. The earnings were great. Everybody will admit the earnings were great. So why did the stock go down? Well, here's what I know. The market has gotten a little bit ahead of itself right now. Okay, if you took the last 100 earnings seasons, that'd be about 25 years worth of earnings seasons. Earnings seasons last basically from 4 to 6 weeks. Okay, if you took the last 100, the average increase in the stock market during those 4 to 6 weeks would actually be up over 15%. It would be up over 15%. But here's another statistic. Whenever the stock market is more than 10% above its 200-day moving average. So you could look at the SPY and see how much that's above its 200-day moving average. But any time the stock market is over 10% above the 200-day moving average, during the earnings season, the market drops about 8%. Right now, the stock market is about 15% above its 200-day moving average. In other words, we've already had that run up. We've already had that run up in the market. So even though earnings are going to be great, the market's going to come down. And what have I been doing? What have I been doing? Now, don't take my word for this. You got to do your own research. But what have I been doing? I've been taking my positions off one by one by one. Now, I still have some long positions on. What do? I bought protection. I bought the QQQ puts today. We'll see. It's just protection. I'm not saying to short the market. The Fed could come out tomorrow with a $10 trillion infrastructure and the market would jump higher and jump higher and jump higher. But right now, I think the market is overbought. Now, why do I think that? I think that because of the VIX. The VIX hit below 16 today. Right now it's trading around 17. It bounced back up. It's around 17. That's incredibly low, incredibly low. Now the VIX is a fear index. When the fear index is low, it means that there is nothing. People are not afraid of this stock market. They think it's going to go up forever. That's the time when I become afraid. Okay, so I looked at the options on the VIX. Look at the $17 options, which is right around where the VIX is trading. Go out till the end of May or whatever. Go out to May 21st. All right. You'll see that the call options for the $17 strike price, they're selling for about $4.50. Now you look at the same go across and look at the put options. They're selling for about 50 cents. $4.50 for the call, 50 cents for the puts. Now the VIX is a professional index. Most traders don't even look at the VIX. I love the VIX. I look at it every day. Okay, so we got people really betting that VIX is going to go up. And when the VIX goes up, that market is going to come down. I'm saying we're going to get a 10% correction here. We're going down 10%. 6 weeks from now, I'm saying, in my opinion, the market's going to be 10% lower. Could I be wrong? Sure, this momentum is great. The momentum has been driving it up, but I think most of you have profits out there. I'd take some of it off the table. Now, you got to do your own research, and this is just what I'm seeing. I'm seeing the VIX is just so low that the market is pricing in perfection. And something's going to happen now. I do think the earnings are going to be close to perfect. But once again, the market has already priced in perfect earnings. Actually, it's priced in even more than perfect earnings. I think the market is going to come down about 10%. Now, Coinbase. Let's go back to Coinbase. Let's go back to the cryptocurrencies. Look at cryptos. They're a trading vehicle. That's all they are. A trading vehicle. I don't know who's right. I don't know if it's going to $1 million on Bitcoin or zero. But we have a market in front of us, and the momentum is clearly higher now on the pullbacks. You buy in on the pullbacks. And now we can trade things like we can trade Coinbase now. Now, cryptos, you got Bitcoin. There's only going to be 21 million Bitcoins ever. Well, we got Coinbase coming public. They're coming public with 261 million shares of their stock. Maybe Coinbase is a little better to play. I'm not playing it on opening day. Not a chance. It'll probably pop from here. 250 will pop. Maybe it'll close way up. I mean, I think it's going to be volatile out of the gate. It's hard to open a stock at 250 and it just stays at 250. No, there's euphoria coming. There's euphoria, and there's going to be people day trading this in and out. I'd stay away from Coinbase today, but I would be playing the cryptos, not at 63. Wait for the pullback. Maybe it gets down to 50. You buy in, you buy that dip, you sell that rip. Cryptos are great to trade. Like I say, I think, I compare them to the tulip bubble. Look I'm a stock market trader. I'm a gambler. If I was in the 1600s, I'd be playing the tulips. I wouldn't mind what I'm betting on. Look I don't care what I'm betting on as long as there's a market for it that goes up and down. And I don't want a market that only goes up, and I don't want a market that only goes down. I need the volatility. I need the volatility in the stock market. We got this earnings season. Earnings going to be great. It's going to be great. Enjoy the earnings. but the market's going to come down because we've already had the run-up. Now, this is just my opinion. I am a gambler. I'm Tall Mike. If you like this stuff, give me that thumbs up so we can talk more about this stuff. If you really like it, hit that subscribe button. But this is just what I'm looking at today. I'm taking my positions off. I bought a QQQ, a couple of puts, just for protection on my other position because I think the market's gonna come in, okay? That's all I've got. That's all I got today. We'll talk again soon. Tall Mike here. Bye-bye now.